the supply chain situation for the United States, in particular as it relates to critical minerals, is far more precarious than the world understands. What the world sees as an irrational Trump might be better interpreted as a cornered animal who's going to run out of the ability to make weapons in 8 months. I wouldn't be surprised to find out that it's NATO governments, and in particular the United States of America, buying all of the physical silver that they can get their hands on. When you have emerging market debt levels, the GDP levels, which the US, Europe, and Japan have, and when you have emerging market policies, sooner or later, markets are going to treat you like an emerging market. And gold's been treating America, Japan, and Europe like an emerging market for 3.5 years now. And that could be another portion of the crisis where, the Germans say, hey, give us our gold. And the Americans say, well, we're going to pull the troops. And they say, fine, take the troops. They say, yeah, you know what? We're going to pull the troops and we're going to keep the gold. What are you going to do about it? Bitcoin's trading as a highly levered risk asset. And there's nothing that makes me say, hey, you know what I want more of right now? A highly levered risk asset. That's not the world we're in.
Hello, everybody, and welcome back to Reinvent Money, a podcast about money and power. I'm your host, Paul Buitink, and with gold and silver worth over $5,000 and $100 per ounce, respectively, I'm honored to have on the show for the first time Luc Gromen of FFTT. Hi, Luc, welcome.
Hi, Paul. Thanks for having me on. Great to be here.
Yeah, I couldn't wish for a better timing to have you on the show than today, the 26th of January. I mean, we planned this a few months ago, but it's timing-wise, it's perfect because, precious metals going through the roof again. And we're going to talk about that. We're going to talk about geopolitics, trade wars, hot wars. There's so much going on. But since it's your first time on the show, maybe good for you to give a short intro of yourself and FFTT for the handful of viewers that haven't heard of you before. I'm sure most of my viewers know you, but it would be good to get a brief intro.
Oh, sure. Thanks for having me on. It's I've spent 30 years in finance, equity research, equity sales. Was a partner at a couple different regional brokerage firms that were pioneers in bottoms-up fundamental research, and I was the founding editor of a couple different research products that took that research from a bottoms-up perspective, married it with top-down reading I was doing on my own, and created sort of a pseudo macro product. I went out on my own in 2014, created FFTT. And what we do is we connect dots in a unique manner. I'm looking for developing economic bottlenecks and trying to find areas where situations are unsustainable, and then writing for clients how to position to benefit from unsustainable situations in macro, geopolitics, et cetera, which is all overlapping these days, it seems. So,
yeah, especially like this sort of intersection between geopolitics and economics. It's hot at the moment, and guys like yourself, you've been mixing these things for many years. But it seems like most economists have now waken up to the fact that they cannot see those topics separately. You need to understand both in order to be good at predicting the markets. But so I'm glad that I have you on, because you've been so spot on when it comes to, for example, gold. We're going to talk about that. But first, for me, like, I'm a European. I try to understand what the hell's going on in the US at the moment. A lot of fuss about Minneapolis and the state of Minnesota. I've heard protesters have declared like a no ICE zone. How explosive is the situation over there? And enlighten me as a layman European.
It is tense. It's continuing to get more tense. The United States is extremely politically divided, as the most divided I've seen it in my lifetime, and I'm 50 years old. Peter Turchin wrote a great book called End Times, in which he looked at the factors that drive political instability and boiled them down over time to two: elite overproduction and wealth inequality. Elite overproduction is, to simplify, you got too many people graduating from college, you got not enough tradespeople. And the U.S., and then wealth inequality, obviously. On those metrics, the U.S. is at its worst since the 1850s, as he measures it. And so for the Europeans who may not be as familiar, the U.S. fought a civil war in 1860, 1865. So we're in very incendiary, dangerous territory as the United States. In terms of what's happened, this has been we are seeing the buildup or the continued buildup, the acceleration of something that's been underway for 25 years. We offshored our industry to China and hollowed out our defense base and hurt our middle and working classes. We went to war in Iraq on a lie. We then bailed out mortgage fraud and undermined the whole narrative that America's capitalist with a big percentage of this country. Because after 2008, it was very obvious that it's socialism for the wealthy and connected and capitalism for the poor. From 2008 to 2022, and I find that this is not well understood in much of Europe when I traveled there. The death rate among, in particular, white middle-aged Americans of opiates, suicides, and alcoholism rivaled the death rates of Russian men in the 1990s after the Soviet Union collapsed. And when that is happening, that's a leading indicator that your society is breaking. Something is very, very wrong. And like I said, that was 2008 to 2022. Since then, what we can see it in the polling numbers. In the under President Eisenhower after World War II, so early 50s, all the way through to JFK in the early 60s, Americans' faith in the government was 80% plus. It has been 15 or 18 to 20% since 2010. And that's Obama, a Democrat, Trump, a Republican, Biden, a Democrat, Trump, a Republican. There's been no bounce. So we're going on 15 years of the lowest faith in the American government amongst Americans in 70 years, and certainly in my lifetime. And of course, the way COVID was handled here only threw gasoline on that fire and further discredited the entire expert class and Washington. And so, yeah, we're in a tough spot. I think it's. Do I think we're going to have a civil war? No. Do I think we're going to get a lot more political violence in this country? Yes. I certainly in certain areas, probably in Minnesota, probably in other blue cities and states. We'll see. We've got a lot of angry people. We have a lot of guns.
Yeah, and a lot of the problems you just mentioned were going to be addressed by Trump, whether it's the fentanyl crisis or whether it's the deindustrialization to trying to get back industry to the US. He also promised to wage fewer foreign wars. Do you think he's on the right track?
In certain areas, I think he's doing some things really well. The fentanyl deaths are down enormously. They're still way too high, but they're down enormously. And that's encouraging. What RFK has done in terms of trying to rein in the racket, there's actually been talk that they're going to bring them up under something called RICO charges, RICO in America. That's what RICO is, what organized crime is charged with criminally in America. Under racketeering laws. And there's been discussion under Robert F. Kennedy Jr. about looking into certain healthcare practices in this country under RICO statutes. I think that would be a good start. The U.S. healthcare system is one of the great rackets in all of history. Foreign wars, I think he's completely whiffed. And I think some of what we're seeing domestically with the protests against him, I think, are a domestic. It's a sign of how split up we are, right? I mean, remember, we had these protests in 2020, also in Minneapolis, in the midst of a deadly virus that was going to kill us all, but you were safe going to protests. The COVID didn't get anybody at protests, right? Very hypocritical, very, very cynical. So I think there is some level of frustration amongst his supporters. He's done a couple things well. I think he's done a couple big promises that are not going along so well. On the reshoring and reindustrializing, I think they're trying. But what I've said has been using this metaphor from Nicholas Sparks's book and film The Notebook, where what do you want? There's the scene where the girl's trying to decide which of the two guys, and Ryan Gosling's asking Rachel McAdams, what do you want? And the Trump administration can't figure out what it wants. It wants to maintain dollar reserve currency, and it wants to reshore its industrial base, and it wants to maintain the empire, and it also wants to rebuild the America, the country. And the reality is they can't do both. They need to choose. Do they want to be America, the empire, or do they want to be America, the country? And the longer they don't make a decision, the markets are making a decision for them. Because the reality is the debt market doesn't care, Japanese bond market doesn't care, global geopolitics don't care, and it's making things messy.
Yeah. So it doesn't really matter how powerful the president is. In the end, the markets will decide what's going to happen next.
Yeah, well, and he has a choice, right? He has a choice which market, right? He can choose to kill the dollar, or he can choose to kill the bond market on a real basis, or kill the economy, right? If he wants to preserve the bond market, great, let the bond market, but it's the currency of the bond market decision that's being forced on him, and it's being forced on the Japanese.
And to talk about the bond market, we had these Danish and Swedish pension funds selling treasuries. We had a German, the Deutsche Bank, one of the analysts at the Deutsche Bank was also saying perhaps the Europeans should start dumping treasuries. How do you look at these moves?
I think for Europe, it's largely symbolic. That's a lot of collateral in their banking system, I'm told. So basically, it would be a cell phone on some level. If the Europeans really wanted to do something, what they should do is have the European Central Bank print euros and go buy physical gold. And the rise in physical gold would actually increase Eurozone reserves faster than the printing of the euros would debase the euro. It would strengthen the euro. And that would be a way to go about making a statement. Now, Europe does not have a whole lot of leverage other than that. You also say that'll end the LNG shipments, that, we're going to bring our troops home. Now, if I'm Europe, I'd say, great, take them home. Number one, we want to bring them home anyway. We're sick of spending the money. We don't have the money. Number two, it has been fascinating to me that people have believed that Russia is going to overrun Europe, that they're a threat to overrun Europe. America at peak had 170,000 troops in Iraq, and it's a desert. It's a pretty easy ground to hold. And we couldn't hold it with the most dominant military in the history of the world. And yet a big chunk of Europe believes Europe is about to get overrun by the Russians. An army, a size of territory that is literally, I believe, 17 times, 23 times the size of Iraq, with much harder ground to hold, lots of cities, lots of hills, lots of mountains. It's a complete canard that the Russians, and oh, by the way, I don't think they want to go in there and deal with your internal politics anyway. Why would they? Even if they could, which they can't. So on some level, I think it's a good thing if we pulled our troops out in retaliation, because we could actually refocus. But again, that's a decision. Let's refocus on America, the country, and let go of America, the empire. So, Europe, unfortunately, has not been very forward-looking on this. If you guys had kept your nukes, if you guys hadn't gone, if you guys kept your cheap gas with Russia, you'd be in a much better position. Leadership across Western Europe in particular has been very short-sighted, very non-engineering, very non-logistics. Your political class in the West there, unfortunately, is very much dominated by people who think that electricity comes from the wall, food comes from a grocery store, water comes from a faucet. And the reality is that that's not how it all works. Yeah. And so, I think, I think the U.S. has a lot of leverage over the EU, for better or for worse.
Yeah, the French and the Brits still have their nukes, of course. But yeah, most of Europe has been very bad at making right strategic decisions. Like, first of all, of course, saying no to Russian gas and oil, and then completely become dependent on, amongst others, the US, but also the Middle East, and now seeking a fight with the US. So we're constantly shooting ourselves in the foot. But the thing that just bothers me is like the US and Europe, they have so much to gain from being good partners. So this whole escalation is just so self-destructive, not only for Europe, but also for the US. I mean, Holland could decide, for example, not to send ASML machines anymore to the US, but at the same time, ASML needs components from the US. So trade is so intertwined. We need each other so much that this whole, especially this Greenland thing, like I really don't understand why Trump made such a big fuss out of it, because based on contractual agreements from 1951, I believe, the US can basically already do whatever they want to do with Greenland when it comes to building military bases, etc. So why did Trump take this risk of making that such a big thing, Greenland? It also, I think, like 70% of US voters think Trump is out of control. So why is he making these weird moves all the time? Is it still 5D chess, or is it just what's going on?
I can't tell if it's 5D chess, or if it is an admission of how desperate the U.S. supply chain situation is. And I have indications that it could be either way. And if I gun to my head, I would say it's probably 60 to 70% an indication that the U.S. supply chain situation is more desperate than the world understands, especially as it relates to certain things, which is our military, right? And one of our big leverage points is, hey, we'll sell you the F-35. Well, we're not going to be able to make the F-35 potentially in 12 months because we didn't secure our supply chain vis-a-vis China. I think it also starts to factor into things like tech supply chains around these critical minerals. And so I think that's my base case, is that what seems irrational is not. The dog that's not barking is that we're acting this way because how does a cornered animal act?
But it's a supply chain, or like if the minerals and chips, for example, are a problem, it makes sense, of course, to build that capacity at home, but it will take like 10 years or so. So in the meantime, it's not very smart to fight with all your partners, or I mean, if we go back to an age of autarky, and it seems like we're going that way, I mean, life will be miserable for all countries. And so I just don't understand what US is to gain from such a standoff globally.
I think my point is that if we don't basically the US's hand might be everybody has autarky, or only the US is brought under control, or is defeated. And if that's the choice, what do? You blow up all the bridges, you burn all, as you retreat. And I'm not saying it's the right thing to do. I don't think it is the right thing to do. I'm simply looking at what is happening and being threatened and trying to decide, is it completely irrational, or is it 5D chess around trying to create some level of autarky to weaken the dollar to facilitate this? Or is this just, oh my gosh, our supply chains are done and China has much more escalation dominance than is being led on. And so this is the next, at least in some circles in Washington, the optimal strategy, which is turn over the table. If we can't win the chess game, then we're going to flip the entire table. And what I have heard in the supply chains and what I'm reading on the supply chains is very indicative that the supply chain situation for the United States, in particular as it relates to critical minerals, is far more precarious than the world understands. What the world sees as an irrational Trump might be better interpreted as a cornered animal who's going to run out of the ability to make weapons in 8 months. Then, if you start from there and work backward, a lot of what you're seeing out of Washington makes perfect sense. And that's a bit of a scary thought.
But if that's the case, that the US is not able to produce any more weapons in, let's say, 8 months because of supply chain constraints, then escalating with China is not going to make things any better, right? It's only going to make things worse.
Nope. No, you're exactly right. And so what do? throw a grenade into Europe, and walk away.
Yeah.
I mean, there's, again, to be clear, that is not what I don't think it's the right thing to do. There are elements within the US that I think would absolutely think that's the right thing to do. And think about what we're trying to say, right? Which is not, we want to throw a grenade into Europe. It's, you have to choose between the US or China. And if you're going to supply China at all, then we're going to throw a grenade in there. Well, the reality is if you cut off China, you're going to starve. The European economy is going to collapse instantly. And oh, by the way, so will the American economy. So then you have to take the step back and go, why would otherwise rational people, and even whatever you think about Trump, he has a wide array of advisors who are very, very smart, rational people. Why would they say you have to choose one or the other? Either they've all collectively lost their minds all at once, or they know they've lost. They know they are not, their supply chains are going to not be sufficient within 7 to 8 months. And so they're going to try to force an irrational choice, force the action, because if that's the view, then you're better off having everybody collapse than just the US in their eyes. I don't know that it's the right thing to do. I don't think it is. I think there's better ways to do it where you could get a more balanced outcome that's better for all. But the world is full of kings who would rather burn, burn the world to the ground than cede an ounce of power.
Yeah, within this very destructive game, I believe Europe has the weakest card. So if we go to an age of autarky, then yeah, Europe is good at making rules, but that's about it. So.
Yeah. Especially when, I mean, I talk to people in the manufacturing side of Europe, right, and across Germany, and they can't compete with the Chinese. It's not even close. The euro would have to fall 80% against the yuan. And you do run a more balanced, that can happen, but that's going to be inflationary. Now you've got bond market problems. It's the same problem, and we have the same problem, right? We can make nuclear power plants, but our cost to make a nuclear power plant is 83% more expensive than China, and it takes us 5 to 10 years longer.
Yeah. And when back in the day, we used to come together and make like a Plaza Agreement or a Louvre Agreement, and also to weaken the dollar, for example. So there are more like sophisticated or more decent ways to solve our international problems than just escalating and go back to autarky, right? So why are these types of arrangements not taking place anymore?
Because I don't think I think we're beyond that point. You look at global debt to GDP during the Plaza Accord, it was way lower. You look at the giant great power competition, the Cold War, right? What percentage of the US factory base was in the Soviet Union? Basically none of it. What percentage? Yes, there was trade between Europe and the Soviet Union, but what percentage of Germany's industrial base was in the Soviet Union? Basically none. In contrast, the United States has an enormous percentage of industrial base. Europe has an enormous percentage of industrial base in China. You look at the practicality of, the American army was in Germany. The American army was across Europe. The American army was in Japan. We sat the Germans and the Japanese down at the Plaza Hotel and said, here's how it's going to go. And I know that we sort of, but that was and it was sort of for the good of all and blah. But there was a trade-off, which is that you can see back to the Blessing letter, right? Carl Blessing, the Bundesbank president, right? Where we said, listen, you start exchanging dollars for gold, we're going to take our troops out. So there was much lower debt to GDP. There was a much different setup of industrial production. There was a much different, set of trading partners in this case. And the Chinese and now, the problem is you devalue the dollar, you're going to send inflation up here, you're going to break the bond market. And that's going to break the bond market there. You devalue the yuan or the yen, it's going to break the bond market there, it's going to break the bond market. So there's an order of operations that has to be done. You can still do it. You got to take gold to $20,000, $30,000, $40,000 an ounce. And then you change, We have a provision in our financial accounting manual for Federal Reserve banks. I believe it's the Dutch central banker a couple of years ago said to Jan Neuenhuis, we have the gold revaluation account we can use, and you buy down the debt, and then you can start reorganizing currencies without blowing up the bond market. But any attempt to restructure currencies like the Plaza Accord, all you're going to do is blow up the bond market in days. And we saw that in April of last year, right? Trump did Liberation Day. The U.S. Treasury market started crashing 7 trading days later, and that'll keep happening until you buy down the debt with gold first. And is this move in gold starting to move in that direction? Maybe. I don't know. Hopefully, because I think it's very preferable to the alternative, which is the global economy burning down.
Yeah, so gold is the elegant solution to restore faith among nations and global trade.
I think so. I think it is. I'm hopeful. I'm hopeful.
But you're saying it needs to go to like 25,000 or so per troy ounce to find the right level, or?
Oh, at least. The 25,000, maybe not at least. I just put a post up on my X feed that it's a chart I've been posting for years, and it's the market value of gold, market value of the United States official gold position. So just our gold reserves times gold's price as a percentage of foreign held treasuries outstanding. And that percentage was never below 20% before 1989 when the Berlin Wall came down. After today, as we sit here today, it's at 14%. So gold would have to run another 50% just to get to the level seen in 1989. The long-term average was 40 to 60%. So gold would have to rise another 3 to 4x from here. So 15 to 20,000 just to get to the long-term average. And in 1980, when we had an honest to goodness dollar crisis, it went to 135%. So gold would have to go up another 9x from here, or $45,000 an ounce in an honest to goodness dollar crisis. And as of, about a month ago, I would always say when I said this, I think there's no chance of an honest to goodness dollar crisis. I'm starting to think that there could be an honest to goodness dollar concern, right? Based on the actions of the last month or two as a culmination of all of the things we've laid out and of the last 25 years. So yeah, if you get gold up to 20,000, that's going to create $5 trillion for the U.S. Treasury if they want to revalue it to buy down U.S. Treasury debt. And then you can restructure the economy. It's essentially a giant currency devaluation where the bondholders of the world lose. And that's what has to happen. The debt's unrepayable. It is mathematically, that is a mathematical certainty. Now then, if you want to take gold to 20,000, you buy down $5 trillion of debt, particularly all at the long end, and then you want to raise rates to 8% to fight inflation, great. You're going to have a recession, but you're not going to, right now, if they raise rates to 8% to fight inflation, U.S. interest expense would be, it'd be $2.8 trillion on $5 trillion in receipts, and receipts would collapse because it's all very interest rate sensitive. So, you would have $2.8 trillion in interest, and you'd have, 3.5 trillion in entitlements. So you would have 150% of receipts, 200% of receipts in entitlements and interest. And then you either default on the bonds or you print the money, right? They're stuck. So that's what gold does. Gold devalues sovereign debt once you get to the end of the road in the long debt cycle. And that's where we are.
Yeah. Japan is also a interesting topic, of course. You've written a lot about that too. It's in the spotlight again. The US could use gold to reset the system, basically, but Japan doesn't really own gold, right? So how is Japan going to develop over the next few years, and how is that going to affect other debt markets?
Well, the way the Japanese 2-year yield trades with gold, I think the Japanese are buying gold hand over fist, at least at the household level, which is, probably how it would have to be handled, because ultimately, Japan is an ally or and has a large U.S. military presence, and so I would be very surprised if the Japanese officially ever buy gold. But what they can do is tell their people or communicate to their people that having some gold's a good idea. And you call up a chart of the 2-year JGB yield against gold, and they are tied to the hip for the last 5 years. So I think some version of, some gold devaluation will, now how can that look? Well, then the government can buy it from the people, and then the government can raise the price further. There's a lot of different ways you can kind of do that. You probably have to do it in coordination with the West. But ultimately, Japan is a funding currency. Any problem they have there, it's like a balloon, right? If you've got, you press one way on a balloon, it pops out somewhere else. And so anytime they try to, push, the balloon in to address the Japanese situation, it's going to pop out somewhere else, most likely either in the U.S. or in Europe. But, let's see.
Yeah, because the Japanese are the largest holders of U.S. treasuries, right? Do you expect them to start reducing that position and to start buying more Japanese securities?
Yeah, at some point. I mean, ultimately, it's a mathematical certainty, right? It's a balance of payments identity. It's double entry bookkeeping. And so the closer the JGB yields get to treasury yields, the more, in theory, you're going to bring that back. Or the more there is yen weakness and dollar strength, the more foreigners will have to sell their dollar assets to try to address that dollar strength. And the Japanese own not just $1 trillion of treasuries, give or take. They own, I think, at $5 trillion of foreign assets. A lot of that's in the U.S. A lot of that's U.S. equities. So, yeah, it's a very tough situation because ultimately it's forced selling. They will have to, if the dollar strengthens too much against the yen, they will be forced to sell dollar assets at some point to repatriate. So that's just kind of the way the system is balanced at this point.
Yeah, Michael Burry was also writing about that. I saw today or yesterday. So that repatriation trend is going to take place over the next few years, and that will then also lead to higher U.S. Treasury yields in the end.
Well, either higher Treasury yields or higher, weaker dollar, right?
Yeah.
They're going to have to choose. And we know that the United States cannot, with our debt level, we can't afford much more than a 4.6 or 4.8% 10-year Treasury yield. And I think ultimately that's why gold is rising and has been. Gold separated from U.S. inverted real rates back in 2022. Yeah. And rates are rising around the world and gold is rising. That is something that most Americans, Japanese, Europeans, tourists are kind of have initially saw as a curiosity. To me, it was obvious what was happening because you talk to somebody from Brazil and you go, "Hey, have you ever seen gold rise in your currency?" Well, rates are going up. They're like, yeah, happens all the time in emerging markets. When you have emerging market debt levels, that the GDP levels, which the US, Europe, and Japan have, and when you have emerging market policies, sooner or later, markets are going to treat you like an emerging market. And gold's been treating America, Japan, and Europe like an emerging market for 3.5 years now. And now we're getting the acceleration part where everybody's noticing gold. It's got a lot more to go because I just don't see any other way out. We can't raise rates, not to stop this, not for a while at least.
No, so that's the big debasement trade, of course, that everyone is talking about. Talking about repatriation, do you think it's wise, because that's a discussion that's currently being held in not only in Holland but also in Germany, that it would be wise to repatriate more of the gold stored at the Federal Reserve Bank of New York? I mean, the Dutch have already taken some back in 2014, and the Germans also took back quite a bit already. You think it's wise for the Europeans to repatriate more, or would it only ruffle Trump's feathers and make things even more tense between the US and Europe?
I think it's very wise. I mean, the U.S. administration just told you, multiple different people within it, that if you don't control it, you don't own it, right?
Yeah.
You can't control Denmark or Greenland, then you don't own it. If it was my gold, it'd already be back here. But if it was my gold, it'd have been back here 15 years ago.
Yeah.
So, we'll see. And that could be another portion of the crisis where, the Germans say, "Hey, give us our gold." And the Americans say, "Well, we're going to pull the troops." And they say, "Fine, take the troops." They say, "Yeah, you know what? We're going to pull the troops and we're going to keep the gold. What are you going to do about it?" And that's the kind of thing, like, And then the German, you know what the Germans are going to say? And I'm German descent, by the way. My grandfather's family emigrated from, it's now part of Romania, but, the Transylvania Saxon, right? So what are the Germans going to do about it? If we said that, they can't do anything.
No, that's the thing. The US got us by our balls, so they can do basically whatever they want to do. Okay,
and I don't say that, I find the whole concept offensive, to be clear. So I don't want to anger, European listeners. Oh God, another arrogant American, because that's the furthest thing from what I am. Over here, I get called anti-American all the time. I'm simply laying out the game theory of what we could see. So yeah, if it was my gold, why was it here in the first place? Well, to facilitate some transactions, which are breaking down, but then also allegedly from the Soviets. Like the second the Berlin Wall came down, like the Russians aren't coming to take your gold. Why do you still need it in New York?
Yeah, good point. Hey, what about silver? So I understand the case for gold. It's a debasement trade. It's of course time and again it's proven to be the ultimate safe haven. Silver used to be a monetary metal as well. It seems like it's becoming a monetary metal again, especially in India, but it's mostly still an industrial metal. But it's going. Of course, to the moon over the past year, and as also this year, it's going even faster. Today, I've noticed 8% rise or so. I run a bullion dealer. I do notice now that we see a lot of influx from coins coming our way. So, quite a few retail investors are currently selling. Today, we bought back more than we sold, and that's hasn't happened for a long time. So it seems like sentiment is flipping a bit. What's your take on silver?
I like silver. I've liked silver. I've owned silver for a long time. I've always thought that I'd much rather own gold because gold is ultimately a risk for, it's all a monetary asset. There's really no industrial dynamic. I think silver probably still goes higher in the short run, simply because, again, the United States government declared it a critical mineral in November. They weren't saying that because they wanted to spike the price so a bunch of paper traders could make money. That was, oh my God, we're short all of these things. And so to your point, how do you stop being short all of these things? The cure for high prices, or the cure for low prices, and cure for high prices. I would be completely unsurprised to find out 5-10 years from now that, if let's say we watch silver run up to, I don't know, 150, 200. And we start to see big selling of coins. I wouldn't be surprised to find out that it's NATO governments, and in particular the United States of America, buying all of the physical silver that they can get their hands on. And that is pure speculation on my point. But again, when the United States government says silver is a critical mineral, they're not kidding anymore. Like they can print dollars. They need the silver, right? You can't put paper silver into an F-35. You can't put it into a cruise missile. You can't put it into solar panels. You can't put it into semiconductor chips, et cetera, et cetera. You got to actually have silver. And so, silver for me, like I said, I still like it. It's a small position. I was wrong about the gold to silver ratio. I really thought it would stay elevated. I think it still is relatively. It's compressed a lot. But I still don't think it's going back to the long term. You see it at 10-1 or 12-1. I don't think it's ever going back there. And in part, I think because of the industrial usage and what you describe, which is people will sell the silver. And at some point, the price goes up high enough, it starts to create demand destruction on the industrial side.
Yeah, but like Elon Musk was warning about too, and I could also imagine it could sort of bankrupt Chinese solar companies, or they could perhaps invest more in copper-based panels, and there's all sorts of things that can happen when silver goes up too much.
Exactly. Yeah, it can, and that to me, it just makes it it's going to be much more volatile regardless. And I don't know. I like to sleep better than that. I'd rather just own gold, because I think ultimately, gold's the only way out of the debt crisis.
Yeah. And do you expect also then for gold to become, it's something you've been saying for a long time, but gold also to become like the basically the most important asset also for countries and companies to use as a way to clear balances. It will be like the foundation of a new financial system. So gold becoming gold again in that sense.
Yeah, I think it's well underway. You look at global FX reserves, gold is now bigger than treasury bonds. And it's it's especially with the move in the last month, it is now getting close to the size of dollars in global FX reserves, total dollars. So
treasuries plus FX, like the not just treasuries but also FX.
Yeah,
it's still
exactly.
number 2, but it's getting there.
Still number 2, but it was at the start of the year it was 40% dollars, 28-30% gold, and gold's up 25% in short order, right? In a month and a half. So you're probably 40% dollars, 35%, 37% gold at this point. I think the only way all this works is if gold goes back into the system as the primary neutral reserve asset. As that happens, I think it's already happening. B, that will reorder global currencies around balance of payments. So, we always hear, well, the Chinese are mercantile and they're under subvaluing their currency. Great. That means having a neutral reserve asset like gold to settle global imbalances at the FX reserve level means that when China runs big surpluses, the yuan will rise against the debtor nations. The euro will strengthen against the US and UK. Japan should strengthen against the US, UK, and probably Europe. And yuan should strengthen against Europe. And it allows a rebalancing around the balance of payments. And on that metric, the dollar's the dirtiest dirty shirt. It's a much lower dollar. But that's what we need to allow a restructuring of the monetary system so that we can actually make things here again, other than treasury bonds and financial instruments.
Yeah. So that would also mean then planes full of gold flying from A to B in order to settle, right?
Yeah, we people say, oh, gold's so unwieldy. That's kind of the point, right? We used to send, if I recall correctly, we would send a plane load of gold to Riyadh I think it was every month, as late as the mid 60s, to settle oil deficits, because that was the promise we had made to, I think it was King Fahd. I don't remember which Saudi king it was, back in the 30s or 40s. We promised to give him gold for oil. And so, that's exactly what it would imply, is some, periodic net settling, probably quarterly, practically speaking. The Eurozone, marks its gold to market quarterly. The Russians do the same. The Chinese do the same. Americans haven't marked our gold to market in 55 years. And you sort of net out trade balances and boom, boom, boom. And maybe it's only around commodities. That probably makes sense, actually, as well. So, but you can see the flows happening. You can see the price happening. So I think it's underway.
Yeah. And a lot of people worry about confiscation. Is that on your radar too? Especially, for example, silver, if it's such a strategic metal that the US decides to confiscate the metal still at people's homes in order to facilitate industry. Is that something you expect to happen?
I don't, simply because of all of the second derivatives that introduces, the second derivative risks. Number one, if people are worried about violence in America now with these protests, there's probably not many more armed groups of people in America than people that own physical silver. I definitely would not want to be the treasury agents going door to door trying to seize physical metal. You probably wouldn't be able to get a life insurance policy in this country if you were one of those people. It would be very dangerous. And so I think it is much more, and more importantly, I say that half in jest, half serious. More importantly, if they can grab your silver, we can grab Germany's gold. We can grab Americans' retirement accounts. We can, there's $70 trillion gross in foreign assets sitting in America, $26 trillion, $27 trillion net of foreign assets sitting here. If you just start grabbing stuff, you're going to crash the markets. And I don't know which grab will cause that, but people will say, oh, they just grabbed American silver. Germany will be like, give me my gold now. And we'll say, no, you're not getting your gold. And now, boom, now you have a crisis instantly. So to me, I think the more likely than confiscation or seizing is just run the price up. You have a printing press. Run the price to run it to 100. Okay, do we have enough? No. Run it to 150. Do we have enough? No. Run it to 200. Do we have enough? No. Do we, 250? Okay, we're good there. Great. We'll buy everything you offer at 250, and then the price will come back down over time on silver. Gold, I think, is a bit of a different animal. I think, once they run gold up to the price, whatever it's going to go, I think it's going to stay there.
But are you saying then that's the silver run-up, the price run-up we've seen, is that because the US, China, India, sovereign players are actually buying up all the metals? So all these poor retail investors, they're selling for 100 troy ounce or a little bit more, but in the end, it ends up at a sovereign level. Is that what's going on at the moment?
I think it's I do. I actually think it's exactly how I would handle it. If knowing what I know about how critical and everything I've read about how critical the critical mineral situation is in the West and in the US specifically, it's exactly how I'd handle it. Is run it up, squeeze the shorts, and then, just be there welcoming in every ounce of physical that you can get.
Is saving happening with platinum and palladium, you think?
Probably. That's what I would do.
Yeah.
Because again, you have a printing press. Why go through all of the, why undermine your own rule of law any more than you already have over the last 20 years, by the way? We have trashed rule of law in the West over the last 20 years. Why apply the coup de grace to it by running around and seizing metal? Just bid it up with a printing press.
Yeah. Interesting. Final question. You did sell your Bitcoin.
Most of it, not all of it.
Yeah. Okay. Not all of it. Is that also because you don't like the volatility, or because you said earlier you don't like volatility, and especially in these types of unclear times? Do you expect to buy back as soon as sort of the dust settles and things become a little bit more predictable again, like, in global trade and global markets at the moment?
For me, it was not just volatility, which I've been involved in Bitcoin at some level for 13 years now. So I'd lived through that. It's really volatility plus position sizing, right? I had the uptown problem of having bought a lot under 30,000 in 2022, and I didn't sell any of it till just recently, and it was a lot of money. It was an uptown problem. Volatility of that magnitude, when it's that big a percentage of my portfolio, that was a problem. And then the last thing was narrative failure, right? You've got to be objective about what you're seeing, right? And Bitcoin was not acting like a neutral reserve asset. It was acting like levered tech. Bitcoin, for all of the talk about how it's gold 2.0 and better than gold, it's underperformed gold for 5 years. And that is the first time in any 5-year period in the history of Bitcoin that gold has outperformed Bitcoin. Okay, why is that happening? Well, there's lots of possible reasons, but I don't know. When I see things like a Tether, right, which is a company that is synonymous with Bitcoin. They meet with the United States government, talk about something, and sometime later they start buying tons of gold and talk about buying gold miners and look to hire gold traders. And gold now occupies a bigger portion of Tether's balance sheet than Bitcoin. Why? Again, I don't know, but I also know that the Bitcoiners, the most rabid maxis, are just pretending, they're like Jim Carrey and Dumb and Dumber, where they're like, la, 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 like they don't want to talk about it. Which again, at a small enough position for me, that's fine. If, at a huge position, my liquid net worth, I'm not going to hang around. And then the final straw for me was just the technicals. I watched some long-term technicals, and not a big, huge trading short-term technical guy, but on the real long-term monthly charts, it broke down against the dollar and it broke down against gold in a way that it had only broken down 3 prior times. And it was 2014, 2018, and 2022. And after those 3 prior breaks, it fell 60 to 70% against gold and against the dollar. After it had already fallen from all-time highs in each of those prior cases. So for me, I just look at, And by the way, and I've said this before to people, is Bitcoin people have forgotten more about the technology than I'll ever know. The one advantage I have, in any investing endeavor, it's important to know what you know that other people don't know in this, where you are. And what I feel like I have an advantage against a lot of people in the Bitcoin space is I've been consulting institutional investors for 30 years. And the reality is when I hear Bitcoin people say, oh, institutions are come flooding in any minute now. I have 30 years of experience that tell me institutions are not going to flood into charts that look like that. They're just not. They might buy it a little bit, but they're not about to run it from 90,000 to 150 or 200,000 in a couple of months, unless something huge changes. And if something huge changes, I'll change my mind and revisit the position, etc. But based on everything else we're seeing in macro, geopolitics, bonds, etc., Bitcoin's trading as a highly levered risk asset, and there's nothing that makes me say, hey, you know what I want more of right now? A highly levered risk asset. That's not the world we're in as it stands now. So those are the reasons why. I would absolutely, like I said, I still own some. I still like it. I think it has amazing potential to be gold 2.0, to be, but it's not acting like it. That's a fact. So, I am very flexible of mind around it, but for the moment, I am just sort of kind of sitting tight with a smaller position, a much smaller position.
Great. Well, thanks for explaining that, Luc. It was an absolute pleasure to have you on for the first time in my podcast. I know for sure that our readers and viewers also really like it. People can get more information and can subscribe to your newsletter at FFTT-LLC.com. I'll put the link in the show notes. Any final remarks from your end?
No, thanks for having me on. It was great talking with you.
Yeah, thanks so much. And hopefully we can do it again in the future. Take care.
Absolutely. You too.
Bye, Luc.
Bye-bye.